Welcome to the channel. Here's Trader Jan speaking. We have the 28th of March, which is a Saturday, and the purpose of that video is to review the trading day from yesterday in terms of locations we defined. Did they really work out? Would they have added value to the trading if we would have respected them? Then looking at the trades I did and the results, and for sure some learnings made during the day. So let's start with the locations on the 15 minutes chart. The premise yesterday was a range or short. I think that question got answered. So more than I would have expected. Usually I would have expected a rangy Friday, but this one was definitely a short one. So we entered an area like around this here. We entered an area which we didn't touch since September last year, so more than half a year ago. Um, Looking at the locations, so it looks like we didn't quite grab that one. I guess what the learning here is not only marking the high volume area, but actually the area before that. So where it goes up to like this thing here, it's because market participants know that there's a high volume activity here from the past. And if we look at it correctly and see here, like this one spiked down and it got retested here. So this area here would probably have been the better area to choose from the small correction here. Anyhow, we don't want to be too picky. We see here that around 2 o'clock opening of the European market, the markets went down and then tested that area again and then went further down. And then here a bit of they are going down and up and down. But in principle, I would say here, like here, those areas which we defined before, they held pretty much their promise. A challenge for me though is really be patient and trusting those locations which I defined. I could have traded from location to location, but I was, I guess, not too bad yesterday. The result was 143 ticks and a plus. I made 5 trades. Um, 3 of them were running into stop loss, and 2 of them had a profit. The thing which I haven't been so happy with yesterday, even though it was clear at some point it was clear it's a short market, I still made 2 long trades. And not surprisingly, those 2 long trades, they happen to be in the loss. So I should stick to the bias. I only look for short trades when the bias is short. What I sometimes forget in the heat of the market, when you look at the market and you look close at every little candle and interpret every signal, I'm still getting nervous. So having said that, those kind of videos, they're just for myself. If they provide benefit for anybody else, feel free to watch them, but take everything with a grain of salt. I'm not a profitable trader yet. I'm working on that one. I'm on the way. I'm just documenting the way I learn how I do things, and I train my skill to put into words what I actually see on the chart. That's the main purpose of these kind of videos. So then looking a bit more in details instead just of the 15 minutes chart and my trading chart. The trading chart is a 200 delta chart. That's what I decided for myself works pretty well. It means that once the market reaches 200 delta, then there's a new candle being built. It's independent of time, and it's actually representing the dominance at that moment on the market. I still believe that I don't take all the benefits out of it yet. So in terms of locations, shouldn't be too proud about my locations up here because those locations were made, if I not believe, let me check when I did the analysis, at around 1 to 2 o'clock in the morning, so before the European Open. At least this one was already visible. This one was visible as well. Let me switch off one of the indicators here. So I made the analysis around about here. Um, but as we can see here, the previous daily high has held and then the market went south. But in the heat of the day, if you look at this rush up here and then this kind of rangy thing and then the market goes up here. So it's not really clear yet, but once the market went underneath this daily low from here, or even the daily low from the day before, then here it was clearly short. But those more dark markers, those are markers which are set on daily highs or daily lows from previous days. And you see here they have been, and those were the ones like at least these two. Moment. No, at least this one here where it was from September last year. So that one still held. So if I would have been disciplined, and if you look here, the 200 delta chart here, very dominant spike up, but this would be a long trade, so I better don't do that one. I probably would have gone into this trade here, doing a short here, or a second entry then here on that one. That would have been a nice one. But in overall, the locations here, even on the 200 delta chart, that's the opening of the American market here. The green is changing from blue to green. That's the 8:30 timeline for Chicago. Then here it went south and then came back up, and here it was a little rangy in between. That's zooming out a little, and then came up back. And so overall, the locations were not too bad. Mistake from yesterday. 2 trades out of 5 which were positive, but 2 trades out of 5 which were long against the market bias. And I think I should use my trade visualizer much better. I got this little nice tool here, still need to clean it up a little. But if the market is short, just set it here, and then I would need to force myself automatically that I only go into short trades, but this one here is actually 100s and this one is 200 take profit. That's my default setting for the MNQ market. It's 100 stop loss and 200 take profit. Stop loss is 2% of my account. I did the trading on the evaluation account yesterday. Yep. So I guess once the bias is clear, I need to set this one as a learning. I put my trade visualizer and I would only look for short trades, not for long trades. Now, having said that, if we look at where the market volume was actually happening, yeah, that's really interesting. It's like market volume here happened and the day up here, and then the market rushed out, rushed down, happened here again. The market came back to that range. Um, Majority happened here in between around lunchtime, between 11:30 and 12:15, and then the market went further down, came like was trading quite a bit in that range, and it is, yeah, 350 ticks. Once it came out of that range, as you can see here, out of that range, it faked out. Alone that one is 64 ticks, and then went back in. Maybe it's a bit misleading, this, but still it's 350 ticks here. No, that one is only 170 ticks. The market went back in, and then, but if you keep like me, try to trade try to enter trade only at the closure of a candle, and the candle moves already until the mid of the range, I wouldn't go into a trade, especially when you see here that was a lower high and then it built a higher high and then went back here. It has a certain likelihood that it builds a higher low and then builds another higher high. So I wouldn't have taken that trade. I'd still need to discipline myself to wait until the closure of a candle before I enter the trade, because that's actually what I do in my analysis and what everybody does in the analysis. They look at closed candles. And once the candle closes, things start to make sense. So if you enter trades during the candle development and you're successful with that, great, and you're a pro. I try to force myself to only wait until the closure of the candle and look at how the market's orders and the market buy and market sell orders are happening, and what happens with the limit orders and the absorptions. So that's for today. Learning for the day is keep your bias in mind when opening trades. Only trade with your bias. Trust the locations, they've been pretty good. And that's for today. And yep, today's weekend. Happy weekend and enjoy. See you then on the trading floor on Monday.